Hey, what's up, traders? I'm so excited. Why? There's money to be made this week. Yes, you heard that right. There's money to be made this week. If you feel you're gonna make withdrawals this week, type withdrawal on the comment section. Right? If you didn't get my name is Bestman Depre Kelsey Amakri. I'm a technical analysis and also a Forex trader. I manage significant amount of money for wealthy and dangerous people. And very shortly, I'll be breaking the market down. So we get to see the trade opportunity that are available for this week, and also take you guys into the thought process of a profitable Forex trader. The least you can do is smash the subscribe button, the bell notification, and drop a comment at the end of the video so you don't get to miss out on our subsequent videos. And trust me, I go through all of the comments. Your comment can actually be an inspiration to my next video, or better still, I will reply your comment at the comment box. All right, let's jump right into today's analysis. I'll be looking at just two pairs for the week. Yeah, two pairs for the week. Why not three? Neither four. Why two? Because I've come to realize that most of you don't actually watch to the end of the video. You just watch the pair that you're really interested in, and the ones you're not interested in, you just allow the video, you just cut the video short, and you don't really watch those part. But then is each pair or each chart has its own cycle. So and the forex market is ever changing and ever dynamic. So I can be analyzing one pair. That difficulty of that pair or the cycle that's where it's currently facing can actually play out maybe years time another pair, and you'll be like, yo, I've seen this before, and this is what they did, and you will not have that experience. So best believe if you stay to the end of the video, you might actually gain a whole lot than you just watching halfway. But I'm not gonna lie, two pairs, and the other analysis will be at the description box. So let's jump into today's video. All right, in front of us we have the dollar index. With the immediate trend, which is this bullish trend, has run into a major area of resistance, which is here. And we've had this double top. Let me zoom in properly. We've had this double top signaling reversal to the downside. Take that again. This immediate bullish trend has run into a major area of resistance, which is this area marked with the blue bar. And we've had this double top. Double top are bearish reversal sharp pattern. They can reverse a pullback to continue with a major trend. They can also reverse an immediate trend to continue with a major trend. They can reverse a major trend to reverse from being bullish to now being bearish. So this double top just tells of this bullish trend will reverse from being bullish to now being bearish. Double top are bearish reversal chart pattern. This area marked with the purple bar is the neckline of the double top. So once we saw this double top, we knew for a fact a reversal to the downside was very much imminent. And once we broke out, this was the first breakout. Once we broke out of the neckline, we don't sell at the breakout. I've said it before countless times in this channel. I keep saying it, never sell at the breakout. You want price to break out, then pull back into the shoulder line or neckline, then wait for a bounce. Once we bounce, you can start selling all the way to the downside. So once we broke out at first and we pull back for you return, I saw this bearish candlestick bounce from here. I was scared, guys. I'm not gonna lie to you guys. I was scared to click the sell button. Why was I scared? Because I'm more of a breakout, a retest, then I draw my counter trend line. So there was no opportunity for me to draw my counter trend line on the 4 hours time frame. I'm not going to go to the freaking 5 minutes, 1 minute, 15 minutes to draw my counter trend line. Hell no. I take my trade on the 4 hours time frame. The least I can go is the 1 hour time frame. That's my entry level. The 4 hours majorly, but I can get to the 1 hour time frame. The 15 minutes, the 30 minutes, that is where the intraday gamblers come to do their rubbish. Okay, those time frame are not concrete enough for me to actually place my trade on. Okay, so once I saw this 4 hour bounce, I knew the market knew that we are coming down here, but I was too scared. I was not confident. I just decided to sit on my hand. And what happened? We came back here and we reversed all the way to the upside again. Came back here and we started pushing all the way. And once I saw that we are having difficulty breaching this area, you can see I just put a level right here. So I put a level right here. So if we can come back and break below this area, then I'll be ready to start looking for selling position, because this was the area price was having difficulty breaching below. So once we broke out from this level, immediately I jumped in. Once I saw this 4 hours bearish candle break, immediately I just knew for a fact that we are now ready to start looking for selling position. Immediately I jumped in on the sell position. My stop loss was somewhere around this level. We came into my first target. I'm going to zoom up properly so you get to see why I closed out my first position here. Yeah, so if you look left, let me go to the weekly. If you look left, you will notice we've had interactions with this area before. So we broke out from, when we broke out from this level, we came into this level and rejected and started pushing all the way to the upside. When we are coming down, we had issues. We pushed up again, we broke it. We had several struggles around this area before we actually broke above it. Once we are coming down again, we tested this area, we pushed up, we broke up below it before we started pushing up again. So on our way coming back here, best believe this area will put up a fight. Okay, so we'll just look left, identify this area to be an area of concern. This was the area to be an area of concern. Area of concern are not necessarily major areas of support or resistance. They're just areas that can cause an upset to your trade as to why your trade shouldn't get to your profit. Like why your trade shouldn't get to your profit. So once I knew from the 4 hours time frame that this area was an area of concern. Once we broke below here, once we came into this level, immediately I closed out my first position, then push my stop loss. So I sold somewhere around here, right? Then push my stop loss from where I sold from, below where I sold from on my other position, in anticipation that we will get to my overall target. Okay, why did I do that? Because this area have the potentiality of reversing price to the upside. Most of you who are watching this video on LinkedIn, I think you have to go to my YouTube channel so you get to see my thought process at the time as to why I closed out my first trade. The video is available on my YouTube channel, and if you're watching this video from the YouTube channel, please go back to one of my videos. You will get to see why I closed out this trade at this position. All right, so yeah, I know most of you will be like, but your stop loss, your profit from year to year is too small. I get. The Forex market is not your father's house. Whatever the market gives you, you take it. You have to take it. It is better you put a little bit of profit in your pocket, I mean to say, than you incur losses. Okay, so once we come in here, I'm closing up my first position, because while this area have the, I didn't know for a fact we'll come here and reverse, but what I knew for a fact, this area has the potentiality of reversing price. What I knew, it has that small element of it can reverse. And what happened is we started reversing all the way to the upside. So imagine I didn't close out my first position here. I didn't push my stop loss all the way from here down here, and especially the price we get to my overall target. I would have been in profit all the way here, only for price to come in here and start pushing all the way to the upside and come and smash my stop loss. I've said it before, I'll say it again. Most of you, you've done your analysis is actually spot on, or your entry is actually spot on, but you place your trade because you can't identify areas of concern. You've been in a lot of pips, a lot of profit, only for price to come into an area of concern and reverse and now come and smash your stop loss, and you now incur losing trade. The worst thing that can happen to you as a trader is to be in a lot of profit, because you can't identify areas of concern and price comes to this area and reverse and come and smash your stop loss. Best believe the average trader will likely wants to revenge trade, and that losing trade can now open portals of series of losing trade. Okay, so yeah, so this is how you save yourself from getting your hands burned. Right, so once we started pulling here, I think on a more special day I'll make a video about trade management and risk management. I think it will benefit a lot of you traders on a more special day. So what's next for the dollar index? So looking at this from a big picture perspective, this is a double top that I'll call. We've broken below the neckline, we've pulled back for a retest of the neckline, and if I draw my Fibonacci from swing low to swing high, you will realize we came into the 50% Fibonacci level. We bounced from the 50% Fibonacci level right here, and please, I have to beg you, you can't be watching this channel and you're blowing account. Never sell at support or resistance. Never. Why? Because you'll be prone to market manipulations and fake outs. So once we came into this level, I saw this bounce here. Did I click the sell button? Hell no, I didn't click the sell button. So I'm more of a breakout, a pullback, then I will draw my counter trend line. Once price break out from my counter trend line, then I will start selling. So once we had this bounce and we broke out from this counter trend, it just tells me a continuation to the downside is very much evident. But did I click the sell button? Once again, I didn't click the sell button. I'm going to be very truthful to you. There's no point coming here to lie. I'm one of the most realistic. I pride myself to be one of the most realistic and truth-telling forex trader out here on YouTube. Yeah, I won't come here and tell you like guys lies. I'm going to tell you guys the truth. Why didn't I click the sell button here? This candle is too massive, and so if I should click the sell button here, my stop loss would have been somewhere around this level. So it means I'll be risking more than 10% of my account. And as for me, I trade for other people. I manage funds for wealthy and dangerous people. Although I also trade my own personal funds, but the least I want to do is to be playing with people's fortune. I want to take a trade where I can go, I can go to bed sleeping peacefully. Once I do my analysis, I place my trade. Immediately I close my laptop, I go and do other things with my life. I don't come and look at the trade for the next 2-3 days. Yeah. So I want to go to trade, peacefully, not praying, not, I mean, you can pray is a good thing, but not, having fear. So the stop loss area was too wide for me, so I just decided to sit on my hands. I'm favoring this market to the downside. The dollar index, I'm favoring the market to the downside, to the tune of 70% to the downside. I'm going to tell you guys why. Because why? We have a double top from on a major key level, breaking below the neckline. We pull back for a retest. We have a Fibonacci play. We have normal resistance, Fibonacci resistance, candlestick bounce. We've taken out a counter trend line. I still think that's why we shouldn't roll all the way to the downside. So what would be the rules of engagement for me? I'll pretty much be more confident if we start playing around this area. Maybe a push to the upside somewhere around this level. Let me take out this off. Maybe somewhere around this level. Maybe if we can pull back to do a retest of this level. Let me bring up my Fibonacci, swing low to swing high. Cool. If we can come around somewhere around this level and I see a bounce, a bearish engulfing candle bounce, a break of a counter trend line, I'll start selling all the way to the downside. So price should at least pull back for a retest somewhere around there. If we bounce somewhere around there, wait for the bounce. I will draw my counter trend line, a break of my counter trend line. I will start selling all the way to the downside. Pardon me, let me take out the Fibonacci. I apply myself a cleaner chart. So yeah, my overall target will be here. So at least we have this almost 300 pips to the downside. So wait for the breakout, a retest of here, a continuation to the downside should occur. But at this level, I'll be closing out. Once we break out from here, I will bounce from here. I'll be closing out my first position around this level. Why? So it was this level we had difficulty before breaking below. So it's very eminent. So we can come here. It's very possible we can come here, form a base, and start pushing all the way to the upside. I don't care how little this level is. Once it come in here, I'll close up my first position. I will then push my stop loss past break even anticipation. We'll get to my overall target. Once we get here, guys, best believe I'll be closing out all my trade entirely. I'm going to tell you guys why I'll be closing out all of my trade entirely on this level. You have to understand that the dollar index is in a nasty range. Okay, so the dollar index is in a nasty range. We'll be trading between this high and this low. For every time we come bounce, we bounce here, we came back here, we bounced, started pushing all the way to the upside, we rejected here, came back down again, rejected, push up again, came back here, rejected again, came back here, rejected again, start pushing up, come back here, rejected. So it's possible we can take out this level, come back here, and also rejected to the downside. Okay, So once we come in here, I don't care what will happen here. I'm going to close out my first position. If we want to break below that level, all fine and good. We'll reanalyze ourselves, reanalyze the market, and see how we can jump in for a sell. But one price comes in here, best believe I'm closing out my trade entirely on the dollar index. All right, let's look at the Euro USD. Let's see what the Euro USD have for us. All right, traders, in front of us we have the Euro USD chart, which I'll be breaking down very shortly. But I will be breaking this pair down from two different time frame perspective. So you're gonna decide which one you want to trade. But you all know I'm a swing trader. I'm going to stick to the higher time frame. All right, so I'm going to start with the intraday perspective, and I pretty much, not that I want to shade all you day traders, right? I used to be a day trader actually, but I want to show you how why you day trader actually have your hands burnt or your account blown sometime, or why you're prone to market manipulation. So I was with a friend some days ago, sometime around Thursday, maybe Friday last week, and we were looking at the Euro USD chart. So he identified this to be a bullish trend. Is right. So this is a pardon me. This is a low. This is a high. This is a higher low. Take it again. A low, a high, a higher low, a higher low. A new higher high has formed. We pretty much ran into this area, major area of resistance, and we started pointing all the way to the downside. So for him, this was a change in trend. Why? Because this is a high, a low, a lower high, a lower low, a new lower high, a new lower low has formed. This for him was a new lower low. So he was anticipating price at least to pull back into this trend line or this resistance area, bounce, and start coming all the way to the downside. So once price came into this level, as most day trader would do, to run into the entry time frame, which mostly the 30 minutes or the 15 minutes. So on a 1 hour time frame, you can actually see we form what they call a double top. I mean, so my properly. So this is the first top, second top. You see this properly on the 15 minutes or lower time frame. Okay, on the 30 it shows clearly. All right, so this was the double top, and first top, second top. Double top are bearish reverse or sharp pattern. They have the probability of reversing the trend from being bullish to now being bearish. So once he saw the double top, immediately he wanted to click the sell button. I told him, guy, if you click the sell button, you're going to have your account burned. So pretty much this is how he has been trading like this, and most day traders, you guys trade like this. Once you see because why, this is a downtrend to him, we pretty much ran into a major area of resistance, of hard double top. This immediate this pullback will reverse to continue with the major trend to him. So once price breaks out here, I told him wait, at least wait for a breakout, a retest of here. This just go back to reinstate what I said earlier on or several times on my YouTube channel, that sharp patterns, regardless of the time frame they'll call, whether the monthly, the weekly, the 5 minutes, the 1 minute, 2 minutes, they can't be invalidated. Yeah, they can't be invalidated. So what happened is double top, a break of a neckline. If you have sold somewhere around there, I know most of you sold somewhere around there. Don't lie to yourself. Stop loss would have been this case. Immediately you had this bullish engulfing candle, price started pushing all the way to the upside. Stop loss would have probably been his case, and what happened? He would have had his hands burnt. So this just goes out to say that sharp patterns, regards of any time frame they'll call, they can't be invalidated. So what's next for the dollar index? Are we bullish? Are we bearish? We're pretty much taken out, broken above the bearish trend line. Okay, we've broken above it. We've come back for a retest of it. If I see some bullish engulfing candle bounce, if you see some bullish candle bounce here, a continuation to the upside is very possible. At least if you see some bullish engulfing candle bounce from this area, pardon me, if you see some bullish engulfing candle bounce from this area, if you see some bullish engulfing candle bounce, a continuation to the upside is very eminent. Pardon me, let me take out this trend line, because this is a breakout, a retest of a trend line. If you have a bullish engulfing candle, price come and take out this area, will start pushing all the way to the upside. But will I be clicking this buy button? Hell no. not click on the buy button yet for this pair. Why not? I'm going to explain that very shortly. If you look at the market from a monthly time frame perspective, you will realize we are trying to form, this market is trying to form an head and shoulder pattern. This is a left shoulder, this is a head, a potential right shoulder is trying to form right here. Either that should happen, this becomes the neckline of the head and shoulder pattern. Head and shoulder pattern are bearish, reverse, or sharp pattern. They can reverse an immediate trend or a pullback to continue with a major trend. I've been saying it a long time, and this immediate trend, this is an immediate trend. Let me zoom out properly. This is an immediate trend within a major trend which is bearish. This is an immediate bullish trend within a major trend that is bearish. And how do we know when a pullback or an immediate trend wants to reverse to continue with a major trend? It will always run into key areas of the major trend. See, we have this bearish trend line coming here, and this is the third touch of the trend line. Principle of price action is still the third touch of a trend line does the reversal, or the reversal of a pullback or an immediate trend to continue with a major trend. So we have price coming in for a third touch of a trend line, and we are also trying to form a reversal sharp pattern on that major area. Left shoulder, head, right shoulder. The weekly does a better justice to this. This is the left shoulder, this is the head. Looks like we are trying to form a potential right shoulder. So maybe it's possible we can actually play around a little bit, start pulling all the way to the downside to form a potential right shoulder. If that should occur, this area becomes the neckline of the head and shoulder pattern. We'll be waiting for a breakout. Don't start at the breakout. I keep saying on this channel, please don't start at the break. You can't be watching this channel and be blowing your account. If you want, they should tie and flog you, please. So yeah. If you have blowing account, please, this channel will pretty much save you from actually blowing your account. I preach the gospel here. I don't preach overnight success. So what are we talking about here? We're talking about it's possible that this immediate trend wants to reverse to continue with the major trend. While we've run into a major area of resistance, well, we've bounced. We also we are trying to form a reversal sharp pattern known as an head and shoulder pattern. Left shoulder, head, right shoulder is forming. This becomes the neckline. Once we take out this neckline, we won't sell at first. We need price to break out, then come back here for a retest. We'll wait for a bounce. We will draw a counter trend, and we can start selling all the way to the downside. Our first target will be this level right here. Once price comes into this level, I'll be closing out my first position. Why? We've had interactions with this level in the past before. It's possible we can come in here and start pulling all the way to the upside. So we don't want to give back what you've made back to the markets. Okay, that's the worst thing that can happen to you as a trader. So once we come in here, I'll be closing out my first position in anticipation my other positions we get to my overall target, which is here. That's if we form the potential right shoulder and we take out this neckline. Pardon me, let me take out this level. I pride myself a cleaner shot. Now looking at this from the intraday perspective, it's also possible we can also pull into this level. We can also bounce and come into this level and start reversing up the way to the upside. Why so? At the bottom of the range, because this market is in a range, this market is in a range. Okay, we've formed what they call an inverse head and shoulder. Left shoulder, head, right shoulder. Let me zoom in properly. This is the left shoulder, this is the head, this is the right shoulder. Now most of you will be asking, the monthly just gave us an head and shoulder pattern, the weekly is giving us an inverse head and shoulder pattern. Why so? You have to understand that once the market goes into a range, the market tends to act irrational. That is, the market tends to act mad. Why so? Because you have equal buyers and sellers inside of a range. The market can give you reason as to why it wants to buy. at the same time give you reason as to why it wants to sell. That is why most traders end up blowing their account inside of a range, because inside of a range, a trader who is not experienced will likely get confused. Most don't even know where to draw their levels, because the market is just neither here or there. The market tends to act irrational, and the market can actually outlive the patient level of a trader, right? Because the market can go into a range for several years. The market only trends 40% of the time. The remaining 60% the market is in a range. It's possible we can reject, because this is looking like a rejection from, we are rejecting from this level. We can start coming down once we come here. So if you're selling from here, if you're selling, like if you sell something around here, one price comes in here, you want to be locking in significant amount of your profit. If possible, close out your position entirely, because you can come here and start pushing all the way to the upside. Especially if I drop my Fibonacci from swing low to swing high, you will realize this area kind of aligned with the 50% Fibonacci level. Okay, this area kind of aligned with the 50% Fibonacci. It's possible we can reject here and start coming. I'm not saying we cannot reject here. It's possible we can reject and start coming here, and we'll bounce and start pushing all the way to the upside. If that should happen, it means we've respected this left shoulder here, the right shoulder, a condition to the upside will continue. But if we take out this level and we start pointing down, it means we start pointing down, we can actually form maybe the, pardon me, let me clean out this, and we will actually form the right shoulder to that the right shoulder of that head and shoulder pattern. Like this is the left shoulder, this is the head. If we start playing around there, we can actually form the right shoulder. So what will be the deciding factor for me? It will be the breakout of here. If we break out from here, all fine and good, I'll be looking for selling position to the downside. But if we want to break to the upside, price needs to come back, and if we take out this level, I'll also be looking for buying position to the upside. What that would mean is the head and shoulder pattern have been validated, and we'll just start pushing all the way to the upside, because this was the level we broke out from before we rejected. We tried again, we rejected, we came down, we tried again, we spiked above, we couldn't sustain, we rejected. But every time we rejected, we found it very difficult to break below this level. So the deciding factor would be the break above this level or the break below this level. Ideally, as trader, once the market go into a range, we are supposed to sit on our hands. But because of how the market can actually be in a range for a lengthy period of time, sometimes we just try to use experience to trade within or inside of a range. But in truth, when the market go into a range, we are supposed to sit on our hands. So I'll be looking at this very careful to see what the market wants to do. If you are breaking above here, okay, I'll be looking for buying position to the upside. If you're breaking below here, I'll be looking for selling position to the downside. So if you're selling, if you're an intraday trader and you are selling, the rules of engagement will be maybe you wait for price to pull back for a retest of here. If price can pull back for a retest of here, you see a bearish engulfing candle bounce, you can start selling all the way to the downside. I think that again, wait for price to pull back for you to do a retest of here, you can start selling all the way to the down. Once price bounce here, if you can draw your counter trend line at the bounce, never sell as resistance nor support. Don't sell as support or resistance. Wait for a candlestick bounce here. If you can draw your counter trend line, you do that, a reversal to the downside will be very much imminent. Okay, this will not be a fake out. Okay, that is if you are selling to the downside. But when price comes into this level marked here, you want to know that the potentiality, when price comes in here, you know that the potential, the price can actually reverse to the upside. So okay, so that's it for the EURUSD. If you're trading this, please I advise you lower your trade, your risks, lower your stop loss. That's a stop loss. If you're trading this, please lower your trade appetite. That is, if you're using a bigger stop loss, you want to reduce it a little bit. Why so? Because the market is in a range. Yeah, This is not a trending market. You want to be careful. All right, that's my time for today's episode. Once again, my name is Bestman de Makri. I'll also be doing other analysis for AUD/USD, NZD/USD, USD card for the upcoming week. All will be premiering on Monday, 8 a.m. West African time. So if you love this video, please do smash the subscribe button on the bell notification. Also get to visit my YouTube channel, Traders Advocate 001. That's the YouTube channel. You will see my picture. Just click that, and you also get to see my other analysis for the upcoming week. All right, take it easy. Catch you guys in my subsequent video. Peace and love.